Welcome to the Deep Dive. Today, we're doing a deep dive into Hamps Bio Limited with you. You've provided us with their draft prospectus for their upcoming IPO on the Bombay Stock Exchange. Quite a fascinating read, I must say. These prospectuses can be a bit like trying to navigate a jungle,
Yeah,
but that's where our expert comes in.
you're right about those prospectuses. Luckily, I love breaking down complex financial information
Yeah.
and finding the real story behind the
To
numbers.
tell me, this company, Hamps Bio Limited, they're making both pharmaceuticals and freeze-dried food products. That's not a combo you see every day.
Right.
I'm already intrigued. What's the story there?
Well, let's start by introducing Hamps Bio Limited, formerly known as Hamps Bio Private Limited. They actually have two separate brands, Hamps for the pharmaceutical side and Freezy Easy for the freeze-dried and frozen foods, which includes things like fruits, veggies, even herbs and flowers.
Two brands, two industries. It's like a business mullet. Business in the front, party in the back.
Huh.
Yeah, so how big of an operation are we talking about here?
They're not exactly a mom and pop shop. They already have a distribution network of over 50 distributors and sell on various e-commerce platforms. And they're clearly ambitious. The prospectus mentions plans for national and international expansion. That's partly why they're going for this IPO.
So let's talk about that IPO. They're aiming to be listed on the BSE SME platform. That's the Bombay Stock Exchange platform designed for small and medium-sized enterprises. What are the nuts and bolts of this IPO? How many shares and all that?
They're planning to issue up to 1,220,000 equity shares. But a portion of those is reserved for a designated market maker. So the shares available to the public, what's called the net issue, is actually up to 1,158,000 equity shares.
So you're saying there are different buckets of shares, some for the market maker, some for us regular folk. And just to be clear, SEBI, the Indian regulatory body, isn't endorsing this IPO just because they've filed this prospectus, right?
Exactly. It's more like SEBI is saying, here's the information, do your research and decide for yourself.
Solid advice. So let's get to the why of this IPO. What are they hoping to achieve by going public?
The prospectus outlines three main objectives. First, they want to purchase plant and machinery for their FMCG division, the food product side. They're looking at a cool 359.80 lakhs for this. Second, brand visibility and awareness are on their agenda, with an allocation of 58 lakhs. And finally, the essential general corporate purposes, which have 151.87 lakhs earmarked.
So beefing up production, getting the word out, and keeping the lights on. Makes sense. Now, before we get too excited about investing, I'm sure the prospectus also lays out some potential risks, right?
You're absolutely right. There are always things to consider before jumping into any investment. And to their credit, Hamps Bio Limited is pretty upfront about a few key risks. For one, they rely on contract manufacturers, which means they aren't fully controlling the production process.
That makes them vulnerable to things like quality control issues or price hikes from those manufacturers, right? Not ideal. What else?
Competition is another big one, especially from counterfeit drugs in the pharmaceutical industry. Think about it. Someone taking a counterfeit drug thinking it's the real deal. Scary. It's a health risk for consumers and a threat to the company's brand.
And this isn't just a hypothetical problem. This is a direct challenge for them, especially as they're eyeing global expansion. What other red flags did you spot?
Well, they get a large chunk of their revenue from just a handful of big customers. If even one of those clients jumps ship, their bottom line could take a real hit. And then there's the constant challenge of managing inventory and predicting demand. If they overestimate, they're stuck with a warehouse full of unsold products, underestimate, and they can't meet customer orders. It's a tough balancing act.
It's a reminder that even a company with ambitious plans and a cool product mix has to navigate a tricky business landscape. I'm guessing there's also a whole web of regulations they need to stay on top of. After all, they're dealing with products that directly impact people's health.
You're right. They're operating under a whole slew of laws, like the Food Safety and Standards Act of 2006 for the food side, and the Insecticides Act of 1968, which is relevant to their food production processes because, insecticides and food sometimes go hand in hand.
And of course, there's the big one for their pharmaceutical products, the Drugs and Cosmetics Act of 1940. I imagine that one is pretty comprehensive.
You got it. That covers everything from how they manufacture the drugs to quality control and how they label them. It's a big deal. Any slip-ups with compliance. And they could be facing penalties, lawsuits, or even damage to their reputation, which can be tough to recover from.
So they're juggling a lot. Exciting potential, but also some serious risks to manage. It all comes down to the people at the helm, right?
Good point. The prospectus introduces the key players in the management team. They've got a chairman and managing director, a whole-time director who handles the day-to-day stuff, and a non-executive director who brings experience from other industries. Plus, they have a board of independent directors to keep things balanced.
It sounds like they've got a pretty solid team in place. But I'm curious. The prospectus gives us their names and titles. But what about the people behind those titles? What are their backgrounds, their expertise? What makes them the right people to lead Hamps Biolimited into the future?
That's a great question, and one we'll start to answer as we delve deeper into this prospectus with you.
Okay, so we've got this picture of a company with an interesting product mix, ambitious plans, and a solid team. But we also know they're facing some pretty significant risks.
Right.
Let's unpack those a bit further. We talk about counterfeit drugs being a major concern, especially as they expand globally. What does the prospectus actually say about how they're tackling that?
They acknowledge that counterfeit drugs are a real threat. It's not just about lost revenue. It's about patient safety and damage to their brand reputation. The prospectus doesn't give specifics about their anti-counterfeiting strategies, but they do emphasize the importance of building brand awareness as a way to combat this.
So it's about establishing trust with consumers so they can easily spot a fake. Know us, trust us, and you'll be able to tell the difference.
Right.
That makes sense. But they also mentioned transportation costs as a potential risk. How big of a deal is that for them?
They're actually very transparent about this. They rely on third-party providers for both getting their raw materials and delivering their finished products, so they're at the mercy of things like fuel prices and the reliability of logistics networks. And let's face it, India's infrastructure, especially in transportation, can be a bit unpredictable.
Delays, strikes, those kinds of things.
Exactly. It's a risk they can't completely control, and it could cut into their profits or even disrupt their supply chain. It's something to keep in mind.
Definitely a wild card. Now, speaking of getting products to market, they're embracing e-commerce, right? Selling on platforms like Amazon, even internationally. That's a smart way to reach a global audience.
Yeah.
But I imagine there were risks associated with that too.
Absolutely. While they're selling on Amazon, including Amazon Canada and Amazon US, they recognize the risks of relying on a third-party platform. What if Amazon changes its algorithms in a way that hurts their sales or favors other sellers? They're also aware of the challenges of fraud prevention and cybersecurity in the online marketplace.
So it's like they're stepping onto a moving platform. They've got to stay agile to keep up. Now let's switch gears and zoom in on their legal and regulatory compliance. We know it's crucial in the pharmaceutical and food industries, but the prospectus mentions that they've actually had a few compliance hiccups in the past. Can you tell me more about that?
Well, they admitted to filing some forms with the registrar of companies that had factual inaccuracies. One example they gave was a form about transferring shares as a gift. Apparently, they couldn't find the actual gift deed and had to rely on other documents.
Ah, so a paperwork snafu. But they also mentioned some delays in filing forms.
Yes. They were late filing a form called PAS6, which is related to changes in shareholding, by 9 days, and ended up paying a small penalty. It's not a major red flag, but it does show that they haven't always been perfect on the compliance front.
It's a good reminder that even with the best intentions, these things can get complicated. Okay, let's talk about the competitive landscape. I imagine they face some pretty fierce competition in both the pharmaceutical and food industries.
You got it. The prospectus paints a picture of a market, crowded with both domestic and international players, some with deeper pockets and greater brand recognition than Hamps Biolimited. They're realistic about the potential for price wars, which could erode their profit margins, and the possibility of losing market share to bigger rivals.
So they've really got to bring their A game to stand out. What kind of insights do we get from the prospectus about their actual financial performance? How have they been doing in recent years?
They lay it all out in their restated financial statements. And remember, these statements have been adjusted to meet SEBI's regulations for IPOs. So it's the information potential investors need to see. One thing that jumps out is their revenue from operations. It's been steadily increasing, which is a good sign.
So their top line is growing, they're selling more products, but are they actually making money? What about their profitability?
They are profitable. Their profit after tax, or PAT, has been solid. They're making money after paying all their expenses, which is key. They've even calculated their EBITDA margin. That's earnings before interest, taxes, depreciation, and amortization.
And what does that tell us?
Their EBITDA margin has been pretty stable, which indicates they're managing their operating expenses well. It suggests they have a degree of efficiency and control over their costs, which is a good sign for any investor looking for a well-managed company.
So the numbers seem to be telling a positive story so far. Growing revenue, healthy profits. What else do we learn from their financial statements?
Well, they also highlight their net worth, which gives us a snapshot of their overall financial position. It's essentially what's left if they sold all their assets and paid off all their debts. And it's been increasing, which shows they're building financial strength. They've even calculated their pay-T margin. That's profit after tax as a percentage of revenue. It's a measure of how much profit they're squeezing out of each rupee of sales.
And is that margin holding steady?
It is. It's been quite consistent, which, again, is a good sign for potential investors. It suggests they've got a business model that can generate profits over time.
Okay, so we've got growing revenue, consistent profitability, increasing net worth. But we've also got to remember that the prospectus is a bit like a highlight reel. They're presenting their best face forward. What about the things they might not be emphasizing as much? What about the stuff that's buried a bit deeper in the document?
You're right. We have to read between the lines. For example, they mention that a significant portion of their revenue comes from just a handful of large customers.
Right, we touched on that earlier as a risk factor.
Exactly. It means they're vulnerable if one of those big clients decides to go elsewhere. It's something to think about. They also provide some information about the geographical distribution of their revenue. Currently, a large chunk of their sales come from the state of Gujarat, where their manufacturing facility is located.
So they've got a strong foothold in their home state, but they're also looking to expand nationally and internationally as part of their growth strategy. Makes sense. Now, we've talked about the numbers, we've talked about the risks, but what about the people? Who are the folks calling the shots at Hamps Bio Limited?
Let's meet the team. The prospectus gives us a pretty good look at their leadership. First up, we have the chairman and managing director, who's been with the company since 2007. They have extensive experience in the pharmaceutical industry, which is obviously a big plus.
So they've been there since the early days and have guided the company through its growth. What about the rest of the leadership team?
They've got a whole-time director who focuses on the day-to-day operations. They're the one making sure the trains run on time. Then there's a non-executive director who brings experience from other industries to the table. A fresh perspective is always valuable.
And I remember you mentioning that they have a board of independent directors, too.
That's right. It's about making sure there are checks and balances, keeping the company accountable, and making decisions in the best interest of all stakeholders. The prospectus also dives into the promoter group. Those are the folks who originally founded the company and typically have a big say in its direction.
Like the company's DNA, right?
Exactly. In this case, the promoter group includes a few individuals and their Hindu undivided families, or HUFs, which are common in India for family businesses. The prospectus gives details about their shareholding, so we can see who holds the real power.
Transparency is always good. Now, I know we've already touched on some of the risks, but I'm guessing the prospectus goes into even more detail. Of the potential downsides of investing in this IPO, let's dive into those. Because informed investors are smart investors.
Right. The prospectus dedicates a whole section to risk factors, and they're not sugarcoating things. They want potential investors to be aware of what could go wrong. We already talked about their reliance on contract manufacturers. They reiterate here that if those manufacturers have issues with quality control, experience delays, or hike their prices, it could really impact Hamps Bio Limited's entire operation.
The chain reaction, what other risks do they highlight?
Counterfeit drugs are, again, a big concern. They point out that this is a huge problem in the pharmaceutical industry, especially in developing countries. It's not just about lost sales. It's about protecting patient safety. They're acknowledging that combating this threat will be an ongoing challenge.
So they're being upfront about the fact that there's no easy solution to this problem. What else?
They also remind us about that customer concentration risk. If they lose even one of their major clients, it could significantly impact their revenue. And they're very open about the challenges of inventory management and demand forecasting. Striking the right balance between having enough product on hand without overstocking is a tricky game.
Especially in industries where products have a shelf life,
Mm-hmm.
like food.
You've got it. Then, of course, there's the risk of regulatory changes. They're operating in highly regulated industries, both in India and as they expand globally.
It's a moving target, those regulations.
Exactly. New regulations, or changes in how existing regulations are interpreted, could mean costly adjustments to their operations. They also highlight their dependence on third-party transportation providers.
Right. They need to get their raw materials in.
Yeah.
And get their finished products out to distributors and retailers.
And they're at the mercy of things like fuel price fluctuations, transportation strikes, even traffic congestion. It's a risk factor they can't fully control. Then there are the inherent risks of their ambitious expansion plans. Growing both domestically and internationally means navigating different regulatory environments, cultural differences, and competitive landscapes in each new market they enter.
It's a big undertaking, no doubt about it. And I imagine as they grow, managing a larger, more complex organization brings its own set of challenges.
Absolutely. Maintaining quality control, ensuring good customer service. These things can become more difficult as a company scales up. And let's not forget the financial risks of expansion. They'll likely need additional funding, and they'll have to manage their cash flow carefully to ensure their growth is sustainable.
It's a reminder that growth isn't always easy, and it's not without its risks. Now, I know the prospectus also acknowledges the potential impact of external factors that are beyond their control. Can you talk a bit about that?
They're definitely aware of the bigger picture. They mention the potential impact of an economic downturn. A recession could lead to decreased consumer spending, which could hurt demand for their products. They also point out the risks of inflation.
Right, if the cost of raw materials,
Well,
energy, and transportation keeps going up, their profit margins could get squeezed.
exactly. And they don't shy away from the unpredictable nature of geopolitical risks. Wars, political instability, trade tensions, these things can disrupt their supply chains, increase their costs, or even make it difficult for them to operate in certain markets.
It's a reminder that we live in a globalized world, and events happening thousands of miles away can have a real impact on businesses everywhere.
They even go so far as to address the potential impact of natural disasters.
That's not something we often think about, but it's a real possibility.
A major earthquake, a flood, a hurricane. These events could damage their facilities, disrupt their operations, or even cut off access to certain markets.
It's a sobering reminder that sometimes Mother Nature throws a curveball. Okay, I know we spent a lot of time talking about risks, but I'm guessing the prospectus also highlights some of the company's strengths and opportunities, right? Can't be all doom and gloom.
You're right. They balance the risk discussion with a good dose of optimism. They highlight their experienced management team as a key strength. These are people with a proven track record in the pharmaceutical and food industries.
So they've got a seasoned crew navigating the ship, which is always reassuring for investors.
Yeah.
What else?
They're also proud of their brands. Hamps and Frizzy are becoming increasingly recognized in their respective markets. And that brand recognition is valuable. It builds trust with consumers and gives them an advantage over lesser-known competitors. Another strength they point out is their diverse product portfolio. They're not a one-trick pony. They offer a wide range of products across both their pharmaceutical and food lines, which helps them cater to a broader customer base.
It's like having a diversified investment portfolio. You don't want to put all your eggs in one basket.
Exactly. They also highlight their strong relationships with distributors and retailers. Those relationships are essential for getting their products onto store shelves and into the hands of consumers. And they're making good use of technology. They've got a robust online presence and are actively using e-commerce to reach more customers.
So they're embracing the digital world.
Absolutely. Now, in terms of opportunities, they see a lot of potential for growth, both in existing markets and in new ones. The demand for both pharmaceuticals and convenient, high-quality food products is on the rise, both in India and globally.
So they're riding some favorable market trends.
They are, and they're not standing still. They're actively researching and developing new and innovative products to meet evolving consumer needs and preferences. It's all about staying ahead of the curve.
Okay, so we've talked about the company, their products, their team, their financials, their risks, and their opportunities. But to really understand their story, we need to zoom out a bit and look at the bigger picture. What does the prospectus tell us about the overall industry landscape in which they operate?
They do a good job of providing context. They give an overview of both the pharmaceutical and food industries in India and globally. They talk about market trends, the factors driving growth, and the competitive dynamics in each industry. It's a helpful crash course.
So what's the main takeaway from their industry analysis?
They paint a picture of dynamic and evolving markets, with both challenges and opportunities. The pharmaceutical industry is being driven by things like an aging population, increasing healthcare spending, and the growing prevalence of chronic diseases. All of these factors are fueling demand for pharmaceutical products, but it's also a highly competitive market with intense price pressure and a constant need for innovation.
So high demand, but also high stakes. What about the food industry? What are the big trends there?
The food industry is being shaped by things like changing consumer preferences, increasing urbanization, and a growing demand for convenient foods. People are busier than ever, and they're looking for quick and easy meal solutions. There's also a growing awareness of health and wellness, which is driving demand for organic, natural, and functional foods.
It's like the food industry is reflecting the broader societal trends we're seeing.
Exactly. And Hamps Bio Limited is well positioned to capitalize on these trends. Their pharmaceutical products address the growing healthcare needs of the population, and their freeze-dried foods offer a convenient and healthy alternative to traditional processed foods.
So they're aligning themselves with the forces shaping the market. Now, I'm always curious about projections. Do they offer any glimpses into their expected financial performance in the future?
They're a little tight-lipped on that front. The prospectus doesn't include any detailed financial forecasts. They're not making any promises they can't keep, but they do discuss their key performance indicators, or KPIs. Those are the metrics they use to track their progress and measure success.
So it's like a dashboard for their business. What are some of the KPIs they're focusing on?
They track things like revenue from operations, profit after tax, net worth, and various ratios that give them insights into their financial health. They're also paying attention to customer acquisition costs, which is key for any growing business. They need to make sure that as they expand, they're not spending more to acquire new customers than they're making from those customers.
It's all about making sure their growth is sustainable and profitable.
Mm-hmm.
Okay, so we've covered the business itself, the industry landscape, their financials. Now, let's dive into the legal and regulatory stuff surrounding this IPO. I'm sure there's a lot to unpack there.
You're right. There's a whole process they need to go through to get this IPO approved and listed on the Bombay Stock Exchange. The prospectus walks us through the key legislation governing IPOs in India, mainly the Companies Act of 2013 and the SEBI ICDR regulations. They're the rule books they need to follow to the letter.
And I imagine there are multiple regulatory bodies involved.
Absolutely. SEBI, the registrar of companies, the stock exchanges themselves, they've all got a role to play in making sure everything is done by the book.
It's like a team of referees making sure the game is played fairly. What else do they discuss in terms of legal and regulatory matters?
They emphasize the importance of good corporate governance, running the company in a transparent, ethical, and accountable way. They talk about the role of their board of directors, their various committees, and their internal control systems. It's about building a strong foundation for their corporate structure. They also outline the requirements for getting their shares listed on the Bombay Stock Exchange, which is the ultimate goal of this IPO.
Right. It's about making their shares available for trading on a public stock exchange. What does that process look like?
They discuss the listing process, the ongoing compliance requirements once they're listed, and the role of the designated stock exchange in overseeing the trading of their shares. It's a reminder that going public is just the beginning. They'll have to maintain a high level of transparency and accountability to their shareholders and the public once they're a listed company.
It's a big step. And I know that taxes are always part of the picture, both for the company itself and for its investors. Does the prospectus delve into those tax implications?
It does. They discuss the tax implications for both the company and its shareholders, covering things like corporate income tax, dividend distribution tax, and capital gains tax. They also highlight any tax benefits or incentives that might be applicable, which is always something investors are interested in.
Okay, so we've covered the business, the financials, the regulatory landscape.
Yeah.
Now let's take a look inside their operations. What can you tell me about their manufacturing facilities?
The prospectus gives us a good overview of their manufacturing operations. They describe the location of their facilities, their production capacity, their key manufacturing processes. They even get into the equipment they use and their quality control procedures.
It's like getting a peek behind the factory curtain.
They also address their policies on environmental protection, health, and safety. They discuss their efforts to minimize their environmental impact, ensure the safety of their workers, and comply with all relevant regulations. It's about being a responsible corporate citizen.
Speaking of their people, I'm curious about their workforce. Who are the folks that make this company pick?
They give us a glimpse into their human resources in the prospectus. They talk about the total number of employees, their organizational structure, and their key departments. They also discuss their employee training programs and their policies on compensation and benefits. It's all about attracting and retaining top talent. And they highlight their commitment to diversity and inclusion in the workplace.
Creating a workplace where everyone feels valued and respected. Now remember, they have big plans for international expansion. What does the prospectus tell us about their export operations?
They delve into their key export markets, their overall export strategy, and the challenges and opportunities they see in the global marketplace. They also highlight any export incentives or government support they're taking advantage of. It's like a passport to their global ambitions.
And I know we talked about competition earlier, but does the prospectus give a more detailed analysis of who they're up against?
They do. They identify their key competitors, both domestic and international, and discuss their strengths and weaknesses. They analyze market share, pricing strategies, marketing campaigns. It's like they're doing reconnaissance on their rivals. And they don't just focus on existing competitors. They're also aware of potential threats from new entrants or emerging technologies. They're keeping their eyes on the horizon.
So they're not just looking at the present, they're thinking about the future too. What about their intellectual property? Do they have any patents, trademarks, or other assets that give them a competitive edge?
They outline their patents, trademarks, and other intellectual property assets in the prospectus. They discuss any pending patent applications or trademarks they're trying to register, and they highlight any licensing agreements or collaborations they have in place.
It's about protecting their innovations.
Yeah.
And using their intellectual property to generate revenue.
Yeah.
Now, does the prospectus address their corporate social responsibility initiatives? Are they involved in any social or environmental causes?
They do. They discuss their commitment to social and environmental causes. They highlight any programs or initiatives they have undertaken to support things like education, healthcare,
or environmental sustainability.
They also talk about their policies on ethical sourcing, fair labor practices, and community engagement.
It's about being a good corporate citizen. Okay, so we've covered a lot of ground here. We've gone pretty deep into Hamps' bio-limited story. But before we wrap up, I want to circle back to those financial statements. We talked about the highlights earlier, but does the prospectus offer a more detailed explanation of what all those numbers mean?
It does. There's a section dedicated to explaining the financial statements in more detail. They break down their revenue streams, their expenses, their assets, their liabilities. They explain any major changes or trends in their performance. And they provide insights into their accounting policies and assumptions. They're aiming for transparency.
That's always a good thing. And of course, they include a full set of their audited financial statements for the past few years, right?
Absolutely. Their balance sheet, their income statement, their cash flow statement, it's all there. Plus, they include notes to the financial statements, which provide additional details and explanations about the numbers. And to give you extra confidence, they've included a report from their auditors, who independently reviewed their financial statements and gave their opinion on their accuracy and fairness.
So it's like getting a seal of approval from the financial experts.
Exactly. And there's another section that's really helpful, the management's discussion and analysis of financial condition and results of operations, or MD&A. It's a bit of a mouthful.
It is, but it sounds important.
It is. It's essentially a narrative from the management team about their financial performance, highlighting key trends, challenges, and opportunities. It's like getting their insider perspective on the numbers. They talk about their revenue drivers, their cost structure, their profitability, their cash flow. They also discuss any major risks or uncertainties they face.
So it's like connecting the dots between the numbers and the company's overall strategy. Now, I know they're planning to raise a significant amount of money through this IPO. Does the prospectus tell us exactly how they plan to use those funds?
You bet. They dedicate a section to explaining how they plan to allocate those IPO proceeds. They break it down into categories like capital expenditures, working capital, debt repayment, and general corporate purposes. They also provide a timeline for when they expect to deploy the funds. It's about transparency and accountability, showing potential investors how their money will be used.
Always a good thing. Now, I know every company has its own set of internal rules and regulations. Does the prospectus address that?
You're talking about their Articles of Association. Those are essentially the company's rule book, outlining their internal governance structure.
So things like the powers of the board of directors, the rights of shareholders, the procedures for conducting meetings, that kind of stuff.
Exactly. It's like the company's constitution. And it's a legally binding document that all shareholders and directors have to abide by.
Got it. Now, I remember you mentioning earlier that the prospectus also discloses any material contracts or arrangements with the company's promoters.
Right. It's about transparency and making sure that any special deals or agreements between the company and its founders are out in the open. These agreements could cover things like preferential pricing for shares, special voting rights, or even just informal understandings about how the company will be run.
It's about protecting the interests of all shareholders and making sure everything is above board. What else do we need to know about this prospectus before we move on?
Well, there's a section on their dividend policy, which is always of interest to investors. They outline how they decide whether to pay dividends, taking into account factors like their profitability, cash flow, and investment plans.
So it gives investors a sense of how they approach sharing the profits with their shareholders. Anything else we need to cover?
The prospectus wraps up with a comprehensive overview of risk factors. It's like a final word of caution, reminding potential investors of the things that could go wrong. They cover a wide range of risks, including those related to the company's business, its financial condition, the industry it operates in, and the overall economic and political environment.
So they're really laying it all out there. Sounds like this prospectus is quite a thorough document.
It is. They're giving potential investors a lot to consider.
It really is. They're clearly trying to be as transparent as possible. So we've explored the company's background, their financials, the risks they face, the industry landscape, even their management team and corporate governance. It feels like we've gone through this prospectus with a fine-tooth comb. What stands out to you as the most crucial information for someone considering investing in this IPO?
For me, it comes down to a few key points. First, their unique blend of pharmaceuticals and freeze-dried foods is intriguing. It's a diversification strategy. That could offer some resilience in the face of economic ups and downs. If one market struggles, the other might help to cushion the blow.
That's a good point. It's like having a built-in safety net. What else?
Second, their financials paint a picture of a company on a positive trajectory. They've got growing revenue, consistent profitability, and they're building financial strength. Those are all good signs for potential investors.
But those positive signs have to be weighed against the risks, right?
Absolutely. And that leads me to the third key point, the risks. They're upfront about the challenges they face, including their reliance on contract manufacturers, the threat of counterfeit drugs, the concentration of their customer base, and the ever-present possibility of regulatory changes.
It's a reminder that no investment is without risk. And this one certainly has its share. But, as they say, higher risk can sometimes mean higher reward.
Exactly. It's all about balancing those risks against the potential upside, and that's where informed decision-making comes in.
Right. Our listener has this prospectus. They've listened to this deep dive with us. What else should they be doing to make sure they're making a smart investment decision?
This deep dive is just the starting point. I encourage your listener to continue exploring the information in the prospectus on their own. Read it carefully, make notes, ask questions, then do some additional research on Hamps Bio Limited and the industries they operate in.
It's like building a case file.
Exactly. Look at their competitors. Analyze market trends. See what the experts are saying. And most importantly, don't put all your eggs in one basket. Compare Hamps Bio Limited to other investment opportunities. See how it stacks up.
Diversification is key. And if your listener is really serious about investing, they might want to talk to a financial advisor too. Someone who can provide personalized guidance based on their individual financial goals and risk tolerance.
That's always a good idea. Investing can be complex, and having a trusted professional in your corner can be invaluable.
Great advice. So we've walked through the jungle of this prospectus, shining a light on the key details, the risks, the potential. I always find these deep dives so fascinating.
Me too. There's always something new to learn.
Well, I think we've given your listener a solid foundation for understanding Hamps Bio Limited and their upcoming IPO. Now it's up to them to decide if this is the right investment for them.
I hope they feel empowered to make an informed decision.
Me too. Thank you so much for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep diving deep.